7% interest rates are upon us. How is the market going to respond? Well, we're going to talk about that this week. Hi, I'm Tony Meier with Windermere Real Estate. I've spent 34 years avidly studying the real estate market, and we're going to try to distill the stats down this week so you can make some determinations on what you want to do. Before we get into it, I'd really appreciate it if you'd hit the subscribe button down below. It helps our channel grow. This week I'll be covering rates, for sale and pending, months of inventory, and median price. First off is interest rates. I alluded to at the beginning. We are sitting at 7% right now. With all likelihood, given the Fed's needed to raise rates, will be higher in the future. So that is having impacts on the marketplace. Every 1% change in rates effectively decreases a buyer's buying power by 10%. So homes just got more expensive in a month because we were at 6% at the beginning of February. Homes for sale. Well, this is the first time this year this number's actually climbed, and we would have been saying all along this year we expect to see these numbers to go up. They hadn't. We're finally starting to see that happen. We're up 7% on listings this week. Our pending sales rose to meet that. In fact, above that, up 13%. We're at 102 this week, which is good news. That affects the months of inventory, which we're going to talk about next. It dropped down from 1.09 to 1.03. Again, we're up 531% from 2022. That was the hottest year I'd ever seen in my 33-year career at the time. So it's not out of the ordinary to expect something to be different. But anything under 2 months is favoring a seller, and we are seeing multiple offers in our marketplace. I had 2 clients involved in multiple offers this week. Both those homes sold above list price with significant non-refundable earnest money and all contingencies waived, which is something we saw commonplace last year. It's not commonplace this year, but it does happen. So finally, median price. We closed out February on the east side at $1,340,000. So last week's closings and this week's closings are down from that. So that may be a trend we're going to have to watch out for. 2% decrease. We're down from 24% from 2022. The market has certainly had a correction. The real question is going to be what happens going forward. Again, if months of inventory maintains its low level and we see multiple offers, we're going to see prices rise in spite of this, but eventually rising interest rates could have a negative effect on that whole process. So if you have questions on the market, you want to know more, please reach out, give us a call, 425-466-1000, and really appreciate you hitting that subscribe button for us today. Take care.